Welcome to another episode of DueYourDD, the YouTube channel / podcast where we dive deep into everything that you need to know about companies. In this episode, we will be talking about Tesla Incorporated, ticker symbol TSLA. We will first start off with a general investment summary of Tesla Incorporated. We will then get into a little bit of a general overview of Tesla itself. Then we will talk about some additional information, including the competitors that Tesla has to face, both EV startups and traditional companies that may be getting into the EV market. Then we will slowly move into some transaction information about Tesla to give you a little bit of info on the share price and where it may be going. Then some notable shareholders in Tesla with a chart from money.cnn.com, which is going to be a great thing for you guys to see. Then we will have a positives and a negatives section where we talk about some good things for Tesla moving forward and some negative things for Tesla moving forward. And then we will have a general outro where we just wrap the entire video up and have some fun. So first, let's get into that investment summary that we were talking about in the beginning. So Tesla Incorporated designs, develops, manufactures, leases, and sells electronic vehicles and energy generation and storage systems in the United States, China, as well as internationally. The company operates in two main segments, automotive and energy generation and storage. The automotive segment offers electric vehicles as well as sells automotive regulatory credits. It offers sedans and sport utility vehicles throughout direct and used vehicle sales, a network of Tesla superchargers and in-app upgrades, and purchase financing and leasing services. The energy generation and storage segment engages in the design, manufacture, installation, sale, and leasing of solar energy generation and energy storing products, related services to residential and commercial and industrial customers and utilities through its websites, stores, and galleries, as well as through a network of channel partners. The company was formerly known as Tesla Motors Incorporated and changed its name to Tesla Incorporated in February of 2017. Tesla Incorporated was founded in 2003 and is headquartered in Sao Paulo Alto, California. Now for the overview of Tesla. Tesla has stated that its mission is to accelerate the world to sustainable energy. The company started its innovation of the automotive industry as a niche differentiator, offering market-disrupting products in the form of luxury electric vehicles. Elon Musk, the company's CEO, and the company have since transitioned from a niche differentiator to a broad differentiator business strategy through the implementation of lithium battery products and the acquisition of the company's Solar City. Tesla's investments in automation and research were a liability in early 2015. However, they became an asset in 2018 to 2019 due to their long-term sustainable competitive advantage in terms of product quality. 500,000 cars it sold in 2020 were a sliver of more than 70 million vehicles estimated to have been sold worldwide. Tesla delivered 184,800 vehicles in the first quarter of 2021. If Tesla was to do that for all 4 quarters in 2021, they would deliver 739,200 vehicles for 2021. For the year of 2021, the automotive industry expects to sell 83 million vehicles. This equates to a market share of 0.0089%. Tesla owns 16% of EVs sold this year. Their Model 3 and Model Y equals the Tesla total divided by the full total, which equals the 16% that we're getting. Those are the two main things being sold by Tesla, the Tesla Model 3 and the Tesla Model Y. Now we have the start of the additional information where we have the topic 1, competitors. All of the charts taken above that you may see throughout the video were taken from barchart.com. Tesla's competition is very interesting because of how new the electric vehicle market is. Tesla's competitors have to be split up into two main groups, EV startups and traditional automotive companies. So first, we'll talk about the EV startups. Tesla has an advantage over all of the new startup companies because they were the first of their kind, and this is shown in the 5-year growth chart where Tesla returns completely outclass competitors. However, it needs to be noted that NIO IPO'd in 2018 and XPEV IPO'd in 2020. With NIO IPOing in 2018, when you look at the 3-year chart, the growth becomes closer. However, Tesla's already developed infrastructure still gives them a huge advantage over NIO. On the 1-year chart, NIO actually has produced better returns than Tesla, and even the new corner in 2020 produced very similar returns to Tesla. The second group of competitors that we have are the traditional car manufacturers going into EV. The second group of competitors that Tesla has to deal with might be the more worrisome of the two groups. With the success of the electronic vehicles and the world shifting towards lowering our carbon footprint, many of the traditional automotive makers, such as Ford and GM, have vowed to make their vehicle lines fully electric in the coming years. GM has stated that they plan to be fully electric by the year 2023, which is only at this point 9 years away. Right now, it is almost unfair to compare the returns of these two companies because until recently, Tesla was in its own niche. However, with them entering the space, Tesla has to be extremely worried about these companies' infrastructure and ability to produce vehicles at a large quantity. It is also worth mentioning that Ford and GM are partnering with other massive companies like Apple and Microsoft, drawing massive amounts of money into those deals. Now we have some transaction information. In May of 2021, Tesla was the third most bought stock, only behind NIO, who we talked about previously, and Apple, as well as being the second most sold stock in May of 2021, only behind Apple. Tesla is extremely volatile and carries a beta of 2.0, which means it trades on average double to the volume of the rest of the stock market. Generally, when a stock carries a high beta like this, it means that there is a potential for fast upswings, but also means that the drops can happen just as quickly. It should be further noted that Tesla is a very different company than traditional companies. They operate with very low margins, and although their financials are getting better over the last couple of years, they are still not at a healthy pace. Tesla's stock price is currently not based at all on the fundamentals of the company. Much of the price comes from the perceived value in the future, and you can see that from the analyst price targets. The price targets have been set are extremely different, and it is hard to truly gauge on what the professionals think is going to happen with the company. For an example, here are 24 ratings from the tipranks.coms from analysts. There are 10 buys, 7 sells, and 7 holds. The price targets range from a low of $67 and a high of $1,080, creating a median price of $608. That means, based off analyst projections, that there is a downside of 30%, but this should be taken with a grain of salt because obviously none of us actually knows what is going to happen with the company. Yes, they are analysts, but they could still be wrong, but it's a nice, way to gauge what you're looking at with the company. We have right here the top 10 owners of Tesla Incorporated and the top 10 mutual funds holding by Tesla Incorporated. First, we'll talk about the top 10 owners of Tesla. A lot of these have very good track records, and you could go into further research on some of these if you are interested in it. But at number 1, we have the Vanguard Group Incorporated with a 5.73% stake, or about 55 million shares. Then we have the Capital Research and Management Company with 4.25% of a stake, or nearly 41 million shares. We then have BlackRock Foundation Advisors with 3.48%, or 33.5 million shares. SSGA Funds Management Incorporated with 3.06%, or 29 million shares. Bailey Gifford & Co. with 1.68%, or 16 million shares. The Geode Capital Management LLC with 1.24%, or 12 million shares. Jennison Associates LLC with 1.12%, or 10.7 million shares. Fidelity Management and Research Company with 1% stake, or a 9.5 million share hold. Northern Trust Investments Incorporated with a 0.86%, or 8.2 million shares, and the Norges Bank Investment Management with 0.81%, or 7.8 million shares. Then the top 10 mutual funds holding Tesla Incorporated are the American Funds Growth Fund of Amenities with 2.38% stake, or 22.9 million shares. Vanguard's Total Stock Market Index with 2.26%, or 21.7 million shares. The Vanguard 500 Index Fund with 1.65%, or 15.8 million shares. The American Funds New Perspective Fund with 1.27% stake and a 12.2 million share hold. Invesco QQQ Trust with 1.06%, or 10.2 million shares. The SPDR S&P 500 ETF Trust 0.82% stake and a 7.9 million shares owned. The Government Pension Fund with a 0.79% stake, 7.6 million shares owned. The Fidelity 500 Index Fund with a 0.74% stake, or 7.1 million shares. The Vanguard International Growth Fund at 0.7%, or 6.7 million shares. And the Vanguard Institutional IDEX Fund with 0.64% stake, or a 6.2 million shares owned. If any of you guys have followed any of these mutual funds or just owners of Tesla, it may help you gauge whether or not you want to buy it. It is also known that Cathie Wood has a 9.75% stake of Tesla in some of her different mutual funds that she owns. So if anybody likes Cathie Wood and her decisions weigh heavily for you, she also has about 3.5 million shares of Tesla across all of her mutual funds. And now lastly, we have the positives and the negatives for Tesla. We will first start off with the positives like we do every single time. Over the last year, Tesla has grown 241% over the last year, Tesla has grown 241%. Over the last 5 years, the stock is up 1,490%. Since the company's inception, they are up over 17,835%. The company has grown at an extreme rate based on the innovative nature of the company and being the first company to put a fully autonomous vehicle on the road. Even within the last year, Tesla has performed quite well, even with the rotation out of innovative tech stocks. In the last 6 months, Tesla's price has been extremely volatile, carrying a beta of 2.0, but the stock remains up 3.5%. With inflation and interest rate scares starting to ease and the money starting to go back into tech stocks, in the last month, Tesla has grown 10%. Other than getting sales from cars, Tesla also gets its revenue streams from multiple other sources, including energy storage and electricity generated from its solar systems. While most major automakers in the US, such as General Motors and Ford, have been negatively affected by the COVID-19 pandemic, Tesla's automotive sales revenue seemed to defy the disruption. In the latest quarter of 2020, quarter 4, the Tesla posted automotive sales of $9 billion, representing a sequential growth rate of 23% or 47% on a comparable basis. Tesla has seen a lot of success with their vehicle sales. Their vehicle sales accounts for 94% of total revenue and nearly 100% of total gross profit. Now for the negatives of Tesla. The revenue streams from a supercharger network and regulatory credits are only a byproduct of Tesla's new car sales. Without car sales, these secondary revenue streams would not exist. This is very important to note because of the narrative that Tesla is more than an automotive company. It is true that they do more than sell vehicles. However, the other products that Tesla is taking on are small portions of the business, and they produce very small amounts of revenue in comparison to automotive sales. Major automotive manufacturers like Ford on the New York Stock Exchange F, Volkswagen, VLKAF, and General Motors, GM, as well as newcomers primarily in China like NIO, XPEV, are set to hit the market with direct competition to Tesla's brands. Although Tesla is labeled as the industry leader, the competition is catching up. Tesla still has a wide moat compared to other startup companies such as NIO and XPEV. However, with companies like Ford, GM, and other traditional car manufacturers entering the EV space, this industry keeps getting more competitive. These major companies are also partnering with huge innovative technology companies such as Apple and Microsoft to develop software. With these massive companies coming into play, it could really hurt Tesla because of the massive amounts of money these companies have to develop. Since the company reached all-time highs January of 2021, it has been a steady decline and has dropped 23%. At lows in the last 6 months, it dropped 30%. There are many factors at play that have caused this drop, such as microchip shortages and in general the growth sector having a rough start to 2021. However, in the last 6 months where Tesla is decreasing value, the Nasdaq index is now hitting all-time highs in July of 2021. While Tesla has dropped by 23% in the same 6-month time period, in this same time period, new competitors such as GM have grown 36% and Ford has grown 68%. So now we have the wrap-up of the video. Now, Tesla obviously is the number one when it comes to EV companies, and a lot of people have invested in it because of that. But as we have covered, at least in the negative section and throughout the video, there are a lot of competitive companies coming in to strike Tesla's market share, which they may not hold up. And Tesla is a extremely thin margin company when it comes to actually making money, and they really need to increase this in the future. They have basically spent all of their money trying to grow their market share and just become a company that can compete in the EV sector, that they have really ignored the profit making. So if that can slowly increase in the future, it's going to look very good for Tesla. But we have to watch out for companies like Ford and General Motors who are ready to strike in and are taking the electronic vehicles very seriously. So it is something to watch. And remember that Tesla's share price is as high as it is because everybody is looking towards the future with Tesla and what Elon Musk is saying they're going to do, leading the electronic vehicle sector and going in. And that's a big part of the share price, not necessarily based on the fundamentals. So remember that as well. Always look into these things and see what is going on, and always check those financials to see if they're getting a little bit better if you're investing in the future. So this wraps up this episode of Do Your DD on Tesla Incorporated. Let me know what you guys thought about it down in the comment section below. If you did enjoy or just found it informative, hit that like button as well as hit that subscribe button for more due diligence on all of your favorite companies. We have 2 videos a week, one on Tuesday and one on Thursday, so make sure you check them all out. We hope you have a great rest of your day, and remember to do your DD.